Hey everyone, just doing a quick video here to talk about Parachain Lease offerings. Specifically, I want to be talking about how to value the Parachain Lease offerings, how to find the Parachain Lease offerings, or how to evaluate the quality of the teams, I think is going to be in a later video. I want to just focus on the actual valuation part right here. So let me also say this is not financial advice. I suggest that you do your own research, and hopefully, this video will be useful in terms of education and will be just only some small part of your research just to understand, is it a good valuation for the upcoming PLOs that you see? I think you really have to make your own decisions, and maybe I can help push you in that direction, but don't rely upon what I'm saying as the only source. So the quick agenda for this video, I will very quickly recap what PLO is. No tech here at all. A very basic set of equations. I will talk a little bit understanding how the valuation comes in. This is really for the market caps for the overall project, so not the PLO, but that will feed into the PLO calculation, which is the next part. I go through an example, a real example of a PLO calculation for a token that's coming up. And then at the end, I talk about scenario testing. You have to have something to compare the numbers against, some sort of context, basically, in order to make sense of whether the number makes sense or not. So just before I go into the details, let me just say a bit of who I am. Back in 2017, I wrote this blog that you can see on the left side, and that was kind of my analysis, shall we say, some thoughts on the Polkadot ICO. There isn't really a lot of chat around about the valuation of Polkadot. It was more about the terms and conditions, shall we say, that the fact that this could be a frozen ERC20 and therefore kind of a liquid. And so I put some thoughts around that in terms of thinking about risk. It was one of the first pieces, one of the first blogs that I know of that's actually even covered the topic. Here I am sort of 4 years later, still covering the Polkadot ecosystem. On the right hand side, you can see the Reddit that I set up also about 4 years ago. It's still going pretty strong, almost 5,000 members, and we do a lot of chatting around about token prices around the Polkadot ecosystem, which includes Kusama as well. So still going strong, and we were the first community basically inside the Polkadot ecosystem outside of the official community. I also worked at the Web3 Foundation for the dates you can see on the screen. It's about 2.5 years, and obviously, sort of thinking about and talking about Polkadot every single day. It's something, obviously, that I've spent a lot of time on over the last 4 years. So I have some idea of how the ecosystem works, shall we say, and how the technology works, but I don't know everything. This is the other thing. There are things I will miss. There'll be things I've misunderstood, and this is also why you can't really rely upon what I'm saying as like your sole source of information. I really need to be out there asking questions like everyone else, going into the Discords and saying, how does this work? What numbers can I get? I've already done that on Discord, and I still do that. Say going into like the Akala Discord and trying to ask some questions. So I recommend everyone else do that. If you want to have some conversation with me, you can find me on Reddit, Discord. I'll give a link later, or you can also find me on Twitter. So, Parachain lease offerings. I'm going to skip the tech. The simplest thing to know is that you have to lock up either your DOT or your KSM tokens. And this is basically your tokens are going to be locked over the duration of the lease. The lease durations can basically vary from project to project, and they also vary whether you're on Polkadot or whether you're on Kusama. So you lock up the tokens, and for doing that, it's like a security deposit in many ways. You get a reward of Parachain tokens, which might be Karura tokens, or maybe Shiden network tokens, as the two examples that I've given here. that's about as much as I want to say on the lease offering itself. There are many other videos around which can also explain it, or you go into the Polkadot wiki and you can get a bit of an idea of the actual mechanics of the auction mechanism. I'm going to kind of skip that. So I said there'll be a couple of basic equations, and these here is basically two. So number 1 and 2 are basically the same equation, it's just a fraction. And I'm saying, okay, you need to go to the project website and find the number of tokens on offer for the PLO. And then you have to guess the number of KSM that will chase that PLO, or the number of DOT. This is a very simple fraction. It's how many tokens can you receive, you, the community, versus how many tokens are being contributed. That's the main equation. That's the main calculation to do. You also need to take a guess at the market cap of the Parachain in order to get some sense of the value of the reward, and therefore does it make sense? Will it be worth your time? Is it worth the risk, basically? At the bottom, I'm kind of saying the same thing. You will get a number of tokens from that first equation. That's line 1 and 2 as together. That will give you a number of tokens, and then you have to multiply that by the token price. The token price you obviously get from the market cap, and that will give you your total reward. So where might you get a valuation from? And this is for the market cap of the overall project. So one place is you can go to, say, CoinGecko or CoinMarketCap. They have a .ecosystem category. This generally, so this won't apply to a lot of PLOs, but it will apply to some PLOs. For example, Reef, they already have an ERC20. I don't know that they're going to do a PLO because I think they're going to build on top of Plasm, so it may not entirely apply here. But there is a chance that for some reason the project has launched an ERC20 already, and then they're going to launch their own Parachain token in the future, maybe a lit entry or something. Not sure. I have mixed feelings on that, but anyway, I just want to say it is a data source. The other place I just found recently is this parachain.live. It seems a nice website. It's quite clean, nicely laid out. It doesn't have a lot of data yet, but I think given how early we are in the ecosystem, I think it's fair that it's not going to have, a full data set for every project that's listed there. I think it's a nice website and one that's worth checking out, and hopefully they can keep it up to date. And then the step which is probably going to be more useful, I guess, or more important, is to actually go and look for valuations in CoinDesk and Cointelegraph. I'm going to explain a little bit about that in later slides about how you can do it. I mean, this is really kind of like messy and it's imperfect, but it's kind of like it's the only thing you can do whenever there's a lack of numbers, which I'll explain. So getting to a valuation of like the market cap, it's worth understanding that there's probably about 3 phases of funding. Founders put in their own money to the project. You can get grant money. At that point, there isn't really a market cap, so to speak of. Then you have the private rounds from VCs, of which there will be a market cap. It may not be known publicly, but there will be a market cap. And then you have any sort of public rounds, which there will be, of course, a market cap because there's a publicly traded token. So I'm going to skip the grant phase and the founder phase because generally there isn't quite an explicit market cap. There can be implied things, but it's so super early at that point that it almost doesn't make sense to speak about a market cap for the project. So I won't dwell on that here. Let me just move on to the private rounds. So what's typical for Parachain teams, or any team, to be honest, if they want to raise money to actually build their project beyond the grant funding, they're going to need to raise some funds. Yes, they can do an ICO or a lock drop or a stake drop or whatever, but there is hassle involved in doing a public round. So it is actually easier just to do a private round, raise say like a year's worth of roadmap of of funding runway, and then try to do some sort of public launch of the network within that 1 year, roughly. Teams may also do a second round, which would add on another couple of years of funding or lets the team expand to a lot more people. And that's also pre-network launch. So here's some of the examples that I've put here. Round one, this will be like the seed phase. You might sell 10% of tokens and have a market cap of about 10 million. That will raise about $1 million, and that will be about a year's worth of runway for a small team. Later on, after a few months, they might sell, say, another 10% of tokens at an implied market cap of 50 million, and that will raise another 5 million for the team, which lets them expand, do some marketing, the usual typical things that people need to do in the lead up to doing a network launch, basically. So here they've sold 20% of tokens, $6 million raised, and a market cap of about 50 million. This is the sort of numbers that you could expect. They are typical. The bull market has maybe pushed these numbers up slightly. Certainly for DeFi, they can be a lot higher. They could even be 10x for the market caps. Let me just push on because I know I've got an example on the next page. So Acala raised 7 million. That wasn't a seed, I don't think. So it wasn't like a round one. In my head, I call it round one, like a seed. It's more like the round two, where the valuation has been ratcheted up a bit higher. So I think they only raised one single round and basically skipped their seed round. They did get grant funding, but 7 million is a decent raise. I don't know how many tokens they sold. That's the other thing. I know that I'm saying that they didn't raise a seed round, but to be honest, I saw an article from KR1, the investor who got involved and bought some tokens from Acala, which gave a market cap of about 7.5 million for the market cap. So that must have been a seed round. Here, they've raised 7 million outrightly at a much higher market cap, even though it doesn't necessarily say. I would guess they probably sold, say, 5 to 10% of the tokens. Therefore, market cap is probably 70 million, but it's DeFi, so more likely 140 million. Whenever they come to launch the Acala network, it's probably higher still. The example below is Moonbeam round one and round two. Round one was 1.4 million, so that's seed, and then round two is 6 million. And again, you don't know the market cap, you just know this is how much money was raised. So if you do a rough guess of, say, 10% or 5% of tokens sold, if you sell 10% of your tokens and raise 1.4 million, then the market cap is about 14 million. If it was only 5%, then they raised at the market cap of 28 million in round one, and then round two is something kind of similar. If they sold 10%, the market cap would be 60 million. More likely, they probably sold closer to 5% at 6 million raised. Then you're going to double that number to see something like 120 million market cap. I don't think that's unfair. I think in the current market conditions, they probably could have raised at a higher market cap. We don't know. Unless you're an investor in those rounds, you won't know what the market cap is, basically, because you'll know what you paid for the tokens. So I mentioned, of course, that a team might do a public round, like an ICO or a lock drop or something, ahead of doing a PLO. You will have some sort of public figure for the value of a token, because obviously it's a public round. But at least there will be some number for you to take an estimate for the PLO rewards, which is really what I'm trying to focus on in this video. So an example, let's walk through the Karura PLO. The total number of Karura tokens available is 11 million. This is something that's available sort of on the Acala website. If not, you can always ask in the Discord and you can see. So what do? We take 11 million, that's the top line of the equation that I showed you earlier, and then you divide it by the total number of KSM that's chasing that reward. If we were to assume that because Akala is a popular project, then Karura is also going to be popular, therefore perhaps 10% of all KSM will chase this PLO. So that's about 1 million Kusama, give or take, and that gets us to the number of about 11. If you've been in the Akala Discord recently, you may have seen this figure of 11 thrown around a couple of times. This is basically where that figure of 11 comes from. I'll add a little caveat there, which is that I don't know if this is for one PLO or multiple PLOs. There is a fixed market cap for Karura. They're not going to have any inflation. But the thing is, the lease period for the PLO is essentially fixed. So if they pay out all of their tokens now, they guarantee themselves a lease for that particular amount of time. But then what happens once that time has expired, and then if they want to continue being a parachain, they need to have another PLO. But then if there's no rewards left, then I'm not sure what happens. That's why I'm a little bit confused. I'm not sure what the answer is here. In my calculations, I just assumed. I think I assumed that there was going to be 11 million, and that was it. Anyway, so the total reward is 11 Karura tokens per KSM. If we have a market cap of about $1 billion, which I think is a bit high, but let's say that's what it is, then you have a token price of $10, and therefore your total reward is $110. So there's obviously a few things you have to do to guess to get that, and it's obviously a little bit imperfect. Let me move on because I have a few more things to say on that. So what you need to do essentially is you need to create a model and then do some calculations. And this is what I did. You break out a spreadsheet and say, what do we think the market cap could be? So on this screen, I have this, this matrix here where I have market cap, in this column on the left, and then along the top I have participation rates, basically the amount of KSM that's chasing the reward. And then the numbers that I've hidden here are basically the payoffs, the rewards that, like the total reward for each market cap and participation rate. I think this is something that people should probably do in themselves. It's the only way that you're going to get numbers yourself to know whether you think it's going to be a good bet or not. There was quite a bit of work in this, and it's a little bit messy, which is why I'm not really keen to share it. Anyhow, this is the recipe that you should follow. Then, once you get your numbers, you have to then compare those numbers to various scenarios. And this is the context of saying, okay, is, say, $110 good or not? So here's 4 scenarios that I came up with. So one is just to hold DOT in KSM. Not to stake it and not to get involved in the PLO, just to hold those and have capital appreciation. Is that something you should do? That's scenario 1. Scenario 2 is to say, okay, let's say that there's no capital appreciation, but you were staked and you get the sort of approximately 20% native reward. That's scenario 2. And then scenario 3 is, rather than being involved in the PLO, that you just bought Karura tokens in the open market. And then 4, which is another scenario, which is, could you have price appreciation in some other asset, which of course you can do. And basically scenario 1 and scenario 4 are pretty similar. Scenario 4 is just the more general version of scenario 1, where you hold some other token, which may or may not have staking, and it could go 10x. Who knows? This is the sort of thing that you want to factor in. Is your money well placed by going into a PLO, or should it be placed somewhere else? These are the opportunity costs that you should be thinking about. So here is a couple of results from my spreadsheet. I basically figured that if there's a 1% participation rate, which is actually 1/10 of what people expect, so people are expecting a 10% participation rate. If it's only 1%, so therefore there's only 100,000 KSM following this PLO, then the PLO is worthwhile if KSM is flat and the market cap is 750 million or more. Otherwise, if the participation rate was 0.5%, so 50,000 KSM is chasing it, then the PLO is worth it if either KSM is flat, so no price appreciation, and the market cap is 500 million or more. You could also have KSM doubling, so going 2x, and in that situation where I've said half a percent of KSM is chasing the PLO, KSM can also double, and the Karura market cap is 750 million or more. Obviously, if your KSM are locked up, then they appreciate in price. So that was factored into the scenario as a total reward whenever I was doing my scenario testing. One thing that I found is that the PLOs are very sensitive to participation rates. So the higher the participation rate, the worse your reward will be. What you really want is you want a high market cap because the token is popular, the project is popular, but somehow to have the participation rate to be really low, which I'm not sure if that's going to happen. It's kind of a strange thing. You need to be almost in a D project where investors think the market cap should be high, so the implied market cap is high. Maybe there's kind of fairly low liquidity, and for some reason the project is underhyped, so there's not many people following it. That would be a more ideal scenario for a PLO. If Akala is, say, valued at 1 billion, which as a top tier DeFi project, they easily could be, then I don't think Karura will open at 1 billion. It'll probably be about 1/10. And that's assuming that Akala is worth 1 billion. I don't know. If Akala is worth 10 billion, then perhaps Karura could be worth 1 billion. So this is where we don't know the answer. We have to guess at the answer, and that's why I did a spreadsheet and I did a whole bunch of calculations. So now kind of go back to the four scenarios that I mentioned and try to compare whether I think it's worthwhile or not. So here's the results of my modeling. If you hold DOT or KSM and you don't do any staking, then you're probably worth getting into a PLO. Staking has a minimum stash requirement, so if you don't have enough, then you can't be staking. Whereas the PLOs, as best as I'm aware, they don't have this minimum, and that's where it could make sense to be involved in any PLO because you will at least get some reward. The caveat there is obviously is that you're locking up your tokens for some amount of time where you can't sort of panic sell them. In fact, they're going to be locked up longer than if they were staked. If they're staking on Polkadot, then it's 28 days to unbond and get your money out or get your tokens out. And on Kusama, I think it's like 6 or 7 days. I did it, but I can't even remember. 6 to 7 days, something like this. So it's obviously shorter. Whereas if the Parachain Lease slot was, say, for 48 weeks, then obviously that's quite a different thing. At least in that situation, the PLO rewards will make sense because you will have your dots anyway. The price will appreciate, so you get that reward, and then you get whatever reward comes through the PLO, naturally. Now, if the DOT or KSM price is flat, and you're holding DOT or KSM, then obviously you don't make any price appreciation there, but you're staked, then the PLO probably isn't going to be worth it. So as a general rule of thumb, the PLO is probably not going to be better than the staking reward. That's what my calculations found. There are some times whenever it does beat the staking reward, but participation has to be really, really quite low, basically. Or the market cap has to be insanely high. But the sort of the balance of the two, there is a rather kind of how to put it, a rather you know, poor relation there where the market cap has to be super high or the participation rate has to be super low. And just when I'm working through, it didn't make sense for me, basically, for a lot of PLOs. There may be some which do make sense. It's really difficult to tell because when it's going to be an auction, you don't know what the participation rate is going to be. So that's something you should read into, is that it's a strange auction where the auction can randomly end and then all of a sudden no one else can get in. So participation rate may be incredibly low. I don't know how to call that, basically, but this is my feeling. And then the other thing is you could probably just buy Karura tokens in the open market instead of doing the PLO. And in a lot of scenarios, whenever you're just having like a simple 2 or 3x, then generally the PLO rewards won't beat that. You know, you're almost better just if you're going to buy dots or KSM, you're better just to stake them. If you're not going to buy them, if you just want to buy native Parachain tokens, or you just want to get exposure to native Parachain tokens, then you might be better just to buy them rather than to be involved in the PLO. So that's why I don't think that scenario will be beaten. In my mind. And then obviously, could you buy some other asset? Well, of course you could, and the price appreciation may be much better, but no one knows. It's impossible to call that. I think if you're asking about price appreciation of DOT or KSM versus a parachain now, I'm hoping that the parachains are starting from a lower base, and therefore that they climb higher. DOT has already done quite well over this last year, the same with KSM. I think they could grind higher as more parachains come into the respective ecosystems. But it's much easier to grow a price from a very small base. So this is kind of my feeling for where I think the parachain token prices could be doing rather well, because they start from a low base. Say if it starts at 50 million and then goes to 500 million, that's a 10x. I kind of feel that that's more likely in a parachain than in Polkadot or Kusama. So let me just wrap this up by saying, come and check out the Discord. This is the link. I'll put it below inside the video description. And also we have a Reddit, just to remind you again. We have about 5,000 members, and we've been around for about 4 years, and we are one of the few places where we let you talk about prices. Signal to noise. Come join the Discord. Come and chat with us. Come find us on Reddit and participate. So I hope you found this video helpful, and that's kind of my thoughts of PLO valuations. In summary, I'm not convinced that they make sense in terms of the opportunity costs. Obviously, they can make sense if you are below the minimum threshold for staking, basically. Then you probably do want to get involved.